Okay, so this is a video to try and support you and give you a hand in doing a question here that we have, question 2 and question 3. So I'm going to do them as two separate videos, and this is these are the errors, question 2 and 3, associated with question 5 that I've just asked you to do. So this is just explaining how depreciation works, provision for depreciation works. So I'm going to give you an example, and you'll be able to use that example to decide what do I need to do for this one. Okay, so junior cert, you would have done this. Motor vehicles being a fixed asset is in the balance sheet. And we would have had a heading of cost, depreciation, net book value. So depreciation, remember, is how much something goes down in value every year. In this case, something is worth 60. 20 grand has been taken away from it in depreciation over all the years we've owned it. So now the thing has a net book value of 40. It's worth 40 grand. Okay. So let's just transfer that over here to this. So the motor vehicles account, we have a balance of 60 grand. So that's what the thing is worth at the beginning of the year. Okay. And we have 20 grand of depreciation, which has been written off over all the years. So we have a thing called a provision for depreciation account. It stores all the depreciation account, or all the depreciation on the item that we've had over many, many years. Okay. So this 20 grand that we have here is the depreciation, not just for this year, but for many years on this particular vehicle. And it's all stored in this account. If we depreciate more this year, you'll have another credit, because remember, this is a liability. It reduces the size of an asset account. So taking these two numbers, we put them both in as balances at the beginning here in that account. Now, in my example I have here, I've decided to sell vehicle 1, so this vehicle, which is worth 60 grand, and I got a trade-in of 34. So when I went to the garage, they gave me 34 grand. It was worth 40, but I only got 34 for it. And I was replacing it with a new vehicle costing 140. But because it was worth 40 and I only got 34 for it, I made a loss. So I'll have a new expense which is handled in the disposal account, which I'll deal with now in a second. Okay. So what do I do? When in the motor vehicles account, we just have the value of the things that I buy or sell. So when I sell a vehicle, I'll have a credit in here to make my asset smaller. If I buy a new vehicle, I'll have a debit to make it bigger. Now the word I put in here for buying it is bank. Okay, we don't call it purchases, because usually I'll have to write a check of some kind. Okay, so there will be something from the bank here towards buying my new one. Okay. So what do I do? Start off with motor vehicles. I'll take out the old one, put in the new one. Okay. So the new one's worth 140. I now balance the two sides, and I find that I've got a balance BD of 140. So that means my motor vehicles in my new balance sheet will have 140 as the opening balance there. Okay. And all of this 20 depreciation is gone, because I've cancelled it when I got rid of that old vehicle. And if I decide to depreciate this new vehicle, I'll have a new amount. Let's say if I depreciate it by 10%, I'd have 14 grand put in there as depreciation, and I'd have the new net book value would be 100. Sorry, I added. I should have subtracted. So the new net book value would be 126. So that depreciation I'd have in here of 14 grand, and I'll have a new balance BD. Okay. Now, in the question we're dealing with, all we need to do is just cancel that depreciation, and we need to find out, did we make a profit or loss when we sold it? So the motor vehicles was 60, so we take that out of the motor vehicles account and put it into the disposal account. The provision for depreciation, this is all the depreciation that we have over all the years in the item. I take it out of this account by putting a debit entry in to reduce the liability to 0. And then I'll transfer that into this account. So now this disposal is this account is trying to work out, did I make a profit or a loss? Do I have an income when I sold it because I made a profit on it, or did I sell it for less than it's worth, so I had a loss on it? So that's what this account is all trying to calculate. I have a debit from the motor vehicles. I have a credit from the provision. So that's taking those two away means the thing is worth 40 grand. I was told that I got a trade-in of 34 grand from it when I bought the new one. Okay, and my balance then, that means there's 6 grand left, and that's 6 grand is a balance CD on the credit side, balance BD, okay, on the debit side, meaning that the thing that I sold, okay, because it's on the debit side, it caused an expense. So I sold it for 6 grand less than it was worth, so I had an expense. So that's going to be a loss. And when it comes to me doing my general journal, what I would do here is my motor vehicles, I'm losing 60 and I'm gaining 140. So you might have a credit in the motor vehicles account of 60, a debit in the motor vehicles account of 140. So that represents getting rid of one and buying another one. My provision account, I'll have a debit in the provision account of 20 as I cancel all the depreciation over the years that I've owned it. Then my disposal account, I'll have my loss, which in this case is a debit in disposal of 60 or 6 grand, which represents the loss. And the last thing then is the amount of money I spent. Well, now, if I got a trade-in of 34 against a new one worth 140, that means I gave them the old vehicle and he said it was worth 34, so I had to then give him a check for the remaining so that I could get the 140. So I gave him a check of 106. Now, where did 106 come from? Well, it's 140, take away the 34 grand trade-in. And this figure up here that I've got for 140 at the top, that 140, and I know I've called it bank, but it's actually bank plus the trade-in. So this trade-in of 34 and this figure from bank, those two added together is my motor vehicles. And that's where that 140 comes from. Hope that makes sense for you.